Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 20th of October. All right, just having a look at the where those US equity markets finished. They closed down like 1.4%. The Nasdaq was down about 1.8. Now that would be, a classic sign of a risk-off day, but we didn't see it across the board in the major currency pairs. The yen crosses, no real nosedives, and so just be wary that this risk-on, risk-off profile that the media outlets talk about and we run through here and there, they can drop in and out from time to time. If you're just looking at the, looking at the correlation matrix here, I mean, Dow Jones and gold, very close relationship at the moment, same with the S&P 500. So just keep an eye on probably gold, and it's got the closest relationship or correlation with the equity markets at the moment, not the currencies. Now, if I just give you a look at the dollar index, right before I switch over to the charts, we're seeing, this constant up and down sort of within the range sort of profile. I think this is going to be maintained. Well, not necessarily the range, but false breaks to the downside, like a little knee jerk to the downside back in the range, same on the top side. I don't think the dollar's going to go anywhere just yet ahead of the election, right? There's too much hype around the, Biden and Trump. And also there's a lot of talk around this stimulus package, which, looks like Trump's holding back until after the election. If you vote for me, I'll give you the cash. That's the way it looks like at the moment. So not a clear signal there for me to be getting into the dollar. Now, what does that do for us? Well, if you're looking at the currencies, the majors, right, this is where you can sort of identify where things are a little bit skew-if. Where's my little thing here? Okay, so the Aussie continues to march lower. The RBA continues to talk down the Aussie. They're doing a good job on that. The Kiwi seems to be following it, although I did see some business confidence numbers a little bit stronger than in forecast. Didn't seem to hold the Kiwi back from moving lower. Little activity, very little activity there on dollar yen and dollar CAD. We saw that nice rally here in euro. Now, I didn't see a lot of outstanding euro news, and there's a lot of weird US geopolitical news. So, you know what? Trying to piece that together, it's pretty hard, but looks like the euro may have enough momentum to pop above 118, and then I think it'll drift back down into the range. I'll show you that chart in a second. And like sterling, right, it's just thrashing about from range to range. There's, the media outlets were talking about sterling rallying on the back of, bets that they were going to get a post-Brexit deal, right? So, mate, that's anyone's guess. If anything, if sterling starts to rally, it's like some insider information from some of the politicians for sure, because otherwise it doesn't look like there's a deal coming through. So really mixed markets, right? When you see the Aussie, Kiwi, sterling and euro going in all different directions, there's something weird happening, and it's a bit of a warning bell, right? So if I just bring you back to the Daily Market Insight where I've sort of wrapped this up. Okay, so what we've got is we do have a risk-off sentiment, but it's not clearly evident and impacting across equity markets. Currency markets. It is impacting the gold. So just check that out. And you know what? At the moment, the markets are pretty average, okay, as far as trying to identify where things are going. So to me, the top pick, it's probably even the dollar index or euro. They're pretty much one of the same. I can't see euro rallying. Right, I can't see it. It's been struggling to maintain rallies probably all year. But right at the moment, it does have initial momentum, probably enough to pop it above 118. And then we could see just drift back down into the range back towards 117, the figure. I think that's probably an easy, lower risk trading opportunity at the moment. And why is that? Well, market direction at the moment it's like short term, it's within ranges of most pairs. Aussie and Kiwi are heading lower short term, and they are about to break down on the longer term charts. But you know what? If these other pairs don't go, well, then I can only see Aussie and Kiwi just drifting back into the range. So really tricky trading conditions, because we do not have very clear market direction across any major pairs, right? There's some short-term trades for sure, but just be aware there's nothing you can hang your hat on. Now, just looking where the data coming out, we've got a number of FOMC officials speaking today. I've got a couple listed there, get some housing starts, and that's pretty much all she wrote. There's good CPI data out of the UK and Canada tomorrow, but, it's a long time to wait before then. So what you've got to do is just pace yourself, wait for the currencies to build an opportunity, right? They don't just come up every day, and you're keeping an eye on the random news, right? The more you read this at the moment, the more you can understand that it's just regurgitated crap, and there's nothing really specific about macroeconomic events. This is starting to look like a newspaper, right? Which is all opinionated and biased. Unfortunately, Metastock, Bloomberg, all the news services are caught up in this because they don't have any news to report, any sort of financial market news of that matter anyway. It's all speculative stuff. Anyway, hard markets, but hang in there because that situation can change very quickly. All right, have a good trade day. Cheerio.